currently the Chief Financial Officer at Verve Coffee Roasters. He's also the co-founder of RMA's Global Advisory. He's also led a very interesting career, starting off as an auditor, getting into business development, capital raising, helping with a strategic exit for companies. And now I'd like to really understand more about Anand's background from his perspective. Tell me a little bit more about your background and how it led you to the things you're doing today.
Yeah, well, thanks for having me, Aryan. My background is essentially in three phases. My formative years was spent in India, where I grew up. Um, toughing it out in small town India, and then I decided to go to London to do my chartered accountancy, which I call my cake. And then I went. I was working for as an auditor for KPMG, who transferred me to Silicon Valley,
Mm-hmm.
and then I switched over to industry, and I did my MBA from Wharton,
Mm-hmm.
and that is what I call my icing. And then I did business development, sales, etc., in media and entertainment companies, which was
Mm-hmm.
largely going through a period of rapid change. Uh,
Mm-hmm.
and so that is the experience part of it. So my life can be described as get out of your comfort zone and
Mm-hmm.
anchored on education and experience, and that's what led
Ab-
me.
Absolutely. And I've seen you done some non-traditional things in your career. Well, one, we've seen that you worked at Warner Brothers. I think that that was a very interesting experience that you had. But later on, I believe you were focusing on as well helping companies exit, helping them do capital raising. So tell me a little bit more about that, because those are some non-traditional things for chief financial officers.
Yeah, sure. So, my sort of operational experience was to deal with complexity, and that I got in the media and entertainment space with Warner Brothers,
Mm-hmm.
HBO, and Al Jazeera.
Mm-hmm.
And then I decided to go and work for a startup that was in the virtual reality, augmented reality space in generative AI, and
Mm-hmm.
and what we were trying to do there was create a market for something that didn't exist at that time,
Mm-hmm.
and to do fundraising for a tech company. It's basically not about cash flows, it's about potential, and it's about
Mm.
how do you convince people that there is a market for that. And what I my years in the media and entertainment helped me with the storytelling of how to crystallize the value to an investor
Absolutely.
versus an operator of what we are trying to do, because it's again a future market, not a current market. And that is what I learned. We raised a few, couple of rounds, 20 million to 40
Mm-hmm.
million dollars, etc.
Mm-hmm.
But the main skill set I learned there is how do you gain trust of investors and be able to communicate the vision
Absolutely.
to
And
invest.
I think what I'm looking at in terms of your role at Warner Brothers, it looks like you help with the expansion to new markets, and you also help with the post merger integration between New Line Cinema and Warner Brothers specifically. Where did you learn about the storytelling part, which you were just discussing just now? And was that specifically in Warner Brothers?
The storytelling part was a combination. You evolve in by seeing other people, do large kind of deals, and it's essentially, you create value, but it takes skill to extract value, right?
Mm-hmm.
And at Warner Brothers and HBO, they gave you uh, the ability to execute, but when I went to Al Jazeera, it was like a new entrant into the marketplace. And how do you
Mm-hmm.
differentiate yourself to become like the CNN of America? So that was the place that I really learned my storytelling skills.
Mm-hmm. So, in order to gain trust on a new idea that's not been proven yet, what are the fundamental requirements to be able to tell that or communicate that vision?
Yeah. So the biggest sort of currency that one has is to under promise and over deliver, right? So you do not want to promise the moon. You just be very honest about a roadmap and be honest about what could go wrong, etc., so that the investors fully informed and never surprised. The
Hmm.
second thing is that there is a constant communication feedback loop for any new developments that you want to keep the investor informed about, which then they are understanding of your and are much more patient as opposed to having a knowledge vacuum of what's going on.
Hmm.
And third thing is that you need to show traction of your idea so that
Hmm.
it's just not words, it's actual milestones that are being
Hmm.
delivered. So those are the three things.
Excellent. So you get a track record first. Now I can assume that if you don't want to overpromise and rather you'd rather over deliver specifically, and you want to underpromise, how do you balance showing potential with that specific pursuit? Is it the track record itself, or is it something else?
It's always the track record is rear view mirror. It's always the the future, the value of the future idea. And I learned
Hmm.
this in the movie making. Just because uh, you know like Harry Potter 1 was successful doesn't mean Harry Potter 2 will be successful, right? So it's not the sequel thing. It's about the idea, the freshness of the idea and the market potential. They call it the total addressable market, and then the
Hmm.
serviceable market and obtainable market. And it is about showing a pilot that works.
Hmm.
Think of it as a trailer for a movie, and the trailer highlights the potential, and then they fund the movie. So that's essentially the crystallized, because all of these are early stage investors who are
Hmm.
not really investing in the present, they're investing in the future, and you're the
Hmm.
bridge to that future.
Right. And in both of your experiences at, I believe it was Al Jazeera and also Warner Brothers, you oversaw a post merger between two companies. What's very interesting in mergers and acquisitions is that sometimes there can be clash of culture. Sometimes the products that were promised to be the reason for a merger or acquisition may not turn out to be as promised. What is your process for, because you were overseeing these developments? What's your process of overseeing a merger, because this is really a clash of culture, a clash of different companies essentially. So tell me a little bit more about that perspective.
Yeah, so the three driving principles for any successful mergers and acquisitions. One is the value that is created through the merger or the acquisition, right? And it's generally either you're gaining access to new markets or new products or new customer base or something like that, where you're getting something in exchange for what you're buying, right? So that is to be able to identify that. The second thing is economies of scale. If you become larger, then
Mm-hmm.
you can get synergies. Like, you don't need two accounting teams, you don't need two HR teams, you can combine them, right? So there's an operational efficiency and synergies that you can get, and generally results in some sort of headcount reductions, etc. But it's for the larger good, and that's baked into the pricing model. And the
Mm-hmm.
third thing is identifying, which is the most critical thing, identifying the rainmakers who will make the future thing happen. So in any other operating business, it's people, process, and technology. Here it
Mm-hmm.
is business model, people, and execution.
Mm-hmm. Interesting. And if we were to discuss more about your perspectives behind the financials of a company, something you talked about earlier was not looking at the cash flow, but looking at the potential. So tell me a little bit more about that perspective and how you oversee what potentially what the finances tell you about the company and what other perspectives you have there.
Yeah. So, if you take a mature company, there are two ways, there's only three ways you can generate money. Either you can, get investor money, you can borrow the money, or you can generate it through revenues.
Mhm.
In an early stage company, there is no revenues,
Right.
right? And you do not have enough collateral to borrow the money from a bank. So the only source of revenue, if you like, per se, is people, and you need investors to invest in the people who will then develop the product, who will then develop the generate the revenues. So the
Mhm.
VC model or the angel investor model is essentially saying, have you assembled the right team for the right project or the right idea,
Mhm.
and can they be patient enough to deliver it? So you never generate the cash for 10-year period. You always say, give me the cash to reach 18 months. At 18 months, I'll come back to you for the next stage of money,
Mhm.
and so on and so forth, so that you build trust that in 18 months I didn't promise the moon, I just promised you to go from 0 to 10, and from 18 months to 36 months I'll go from 10 to 40, and from 36 months to 5 years I'll go from 40 to 100, something like
Mhm.
that. So that is the roadmap that you have to this, and that only comes when your story is credible and the facts are credible as well.
Mhm. Now, I've interviewed some other venture capitalists on the podcast as well. One of the most critical factors that they utilize to identify if a company is worth investing or not is the team behind it, the person behind it, the founder behind it, their track record. What I'm curious about is you also mentioned people are a very important part of the evaluation process and of making companies successful. What do you think about people specifically, whether that's the founders or potentially other employees? What about that culture or about the founders do you think make it a compelling company?
Yeah, so the credibility of the founder cannot be overstated, or cannot be underestimated. It is the secret sauce, because ultimately, in my experience, the CFO is the reality check, but the founder is the dreamer.
Hmm.
And without that dream, no dream can be realized, right? So the 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 venture capitalists generally look to the CEO and his track record to see if the vision makes sense, and then they look
Hmm.
to the CFO to ensure that there's a guardian for their money.
Hmm. Hmm.
So the CFO is generally the person who connects with the investors to ensure that, even though there's always going to be mishaps, that the CEO story is validated with the numbers and the journey and all of that, and it's
Hmm.
not smoke. So the CFO role in that case is to be a reality check and a bridge between the CEO's vision and the investor's money.
And I like to say something about that specifically. If you want to maximize impact, understanding the money side of things is one of the most important components of this process. I'll give you a quick example for the medical industry specifically. If you look at urgent cares, 10 years ago, there were 7,000 urgent cares in the US. Now there are over 14,000, specifically targeting underserved areas. Why it's expanded by double in just one decade alone is because now urgent cares profit 500,000 to 800,000 profit or even more. 10 years ago, that was not nearly the same figure. If there's an objective to maximize impact, whatever your skill set is, you have to understand the business side of things, specifically the financial part, right? So to maximize any impact, to create a dream, finances have to be in a very important concept behind that. So you work with startups, and I'm sure you work with many founders. How do you understand and provide that reality check to founders regarding if their vision is able to be executed? Because the numbers, the finances will dictate if that's going to stay, if it's the company to stay alive long enough to create the impact it needs to.
Yeah. So the critical thing of in this thing, in finding a founder's vision, is, are you doing something new, or are you doing something that exists in a new way,
Mm-hmm.
right? So if you take, cars have existed, but Elon Musk came and sold cars in a new way, right? So
Mm-hmm.
he's solving an existing problem in a new way. Same
Mm-hmm.
with Steve Jobs did. He did an existing problem in a new way, right? Like,
Right. Right.
because phones always existed. He just changed the way it operated, right?
Right.
And phone became the wallet. So in most of the CEO's vision, they know what they want, but they don't know how to get there.
How? Yeah.
And you are the one who says, who comes in with the how. because your role as a CFO is a balancing act to not
Hmm.
stifle the growth and the investments, but to make the value judgment that should I hire this developer, should I hire this sales guy, should I invest in the technology part of it, because every dollar counts and has to create value towards that roadmap. And
Hmm.
it is like if you spend on marketing but you time the marketing wrong, it has no return. Whereas if you take the same dollars that you would market into and put it into development or put it into pilot, sales pilots, that has better ROI. So every before any dollar gets spent out, you have to judge what is it delivering, what value is it delivering for me,
Hmm.
and making those trade-offs, because the job of CFO is essentially to make the right trade-offs and nothing else.
Hmm. So what I'm hearing is first identifying what is the value. Is it a new way, or is it solving the problem in a new existing way, or in a new existing way, essentially? Second, from what I'm understanding, is the market. Is this the right time? Is this the right market specifically? In that process, those are two steps. Are there anything else that you is there anything else you do to understand the value of a company, or what is needed to be considered in the process?
Yeah, so the generally, once you identify those two things, the third thing is that what is the competitive landscape, and can you go speed to market? If
Hmm.
you are going to new, so in for example, in the generative AI space that we were in, we were recreating digital humans. So think of
Hmm.
it that today you could see your grandfather only in a photograph because he has passed away, but if you had a digital version of him, he could come and sit with your grandchildren or with his grandchildren, or at dinner in a virtual way. So we did a hologram thing, so but it was ahead of its time. uh,
Hmm.
in a company like FaceBank, we considered face to be your asset. So imagine, how you go now through Clear, through the airports, right? You're making things efficient. And there is a market, people will pay for that Clear,
Hmm.
so
Hmm.
that you can go through the gateway fast, airport terminals faster. So we were trying to do face as your asset. So imagine, and it was combined with sports, so that imagine you go there and the sports stadium knows you, and they deliver your Coke and popcorn to seat G12 while you're watching the match. You don't have to go and stand in the queue to get the thing. So these are new ways of
Very interesting.
doing existing things. So it was more a sense of, is there value being created and how fast can you create it? Those are the two primary metrics that you are.
What's very interesting as well is I've talking to a lot of executives who brought new products to the market. One of the core uh, things I've noticed as a consistent principle is that you qualify other industries and you look at what's already working there, identify core truths and apply to other ones. One quick example that's very easy. I know we're talking about cinema a lot. Is
Right.
in the movie theater, there is now a process where you can order to direct to the seat. Now at stadiums as well, if you look at the stadiums at sports games, you can also do the same thing. I would argue that those are two similar principles and two core truths that are valuable. And if you look at it at a larger scale, the same concept applies about identifying core truths in one industry in one process and potentially applying to others to see the validation. I thought that was very interesting from your perspective. So I think we covered quite a bit today. I think that you have a very compelling perspective behind really being able to make a founder's dreams come into basically reality, provide the reality check, and seeing if it's viable. And I wanted to say that those are very compelling perspectives today. Now, what I'd like to do is go ahead and shift this conversation to a little bit more about you, Anand. And first, I'd like to go over the company that you started. I think we had a brief discussion about it before the podcast, and it was quite interesting. Armis Global Advisory. Can you tell me more about why you started this and more about what the company's about?
Yeah. So Armis Global, is essentially has got three verticals. The primary vertical being advisory on relationships, and we do that through a brand called Vows for Eternity, and it is about matching people for marriage,
Hmm.
right?
Yeah.
Um, and I've lived and worked in 4 continents. I've always been fascinated by people, and it's something that what you do is different from who you are.
Hmm.
And most people spend 90% of their time at work and become their business card. So when you say, "Who are you?" I'm a VP of somebody, or I'm a founder or something, but it's not who you are, it's what you
Yeah.
do.
Yeah.
So, and in a context of marriage, that is very different, because, okay, the what you do is just a paycheck. You can provide me, whatever it is. Who
Yeah.
are you? Do you like hiking? Do you like adventure? Do you like, those kind of personal values are much more important. And and finding that right match, the needle in the haystack, is very, very difficult. And given my wife is from the has a psychology background, so she runs the matchmaking side, and I run the financials and the back office side. But that's primarily what we do. And it's we just incorporated under the brand because we've got some external investors, but primarily it is something that it's one client at a time, at a high net worth individuals who are, who are facing either a generation gap with their parents, with, like, i.e., what the parents are choosing for their husband or their wife is not what they want,
Right.
right? Or they don't have a network here. So
And if we're talking about high net worth individuals specifically, I think that choosing the right partner is probably the most critical decision they make. Unfortunately, and this is a real statistic, I think the divorce rate in America is nearly 50%, right? So if you don't treat this seriously, that's a really big mistake. And I don't think there's enough emphasis on approaching with due diligence and taking your time. I would argue taking your time and treating this very seriously is equally as important as your career. And a lot of people who are high net worth or are very driven don't make that much of don't make that as much of a priority. And I want to hear from your perspective in terms of really what compelled you to start this in the first place. Is it that you've always had interest in the marriage process? What was it for you? And was this a collective decision between you and your wife?
it was a collective decision. It was primarily something that is a very interesting sort of. If you ask who do you want, it's a very interesting problem to solve, and I don't think nobody, even AI, if they can solve this will be really good. Because if you ask who do you want, the typical profile, you know the girls would want James Bond meets Rockefeller, and the guys would want supermodel meets Mother Teresa, right? And those don't exist in the real world, and you have to dial them down. The other thing is the process is equally important. It is the most important decision, because it's not only choosing your life, it's your kids' life, your family's life. You're integrating into a cog. And what I found really is meeting casually in a bar and going out on a date is a different benchmark than choosing, making a 30-year, 50-year-old decision, right, for life kind of thing. So people spend more time choosing a car or a house or a job, but this is even more important than that. So you take that and
Absolutely.
multiply it by 20, 100. That's what it is. And basically, when we started initially, we were just piloting it, and we started for $1,000 or something like that. It is, our business model is quality over quantity, mindset driven, not ethnic driven or religion driven. But
Hmm.
it was basically, and now we are priced at like 30 to 50 grand or whatever it is to do the search. It's like a retained search firm for the marriage market.
Hmm.
But the process is very similar. And it basically, when they get something, it's like 30 grand or 50 grand. It's choosing the wrong partner is the quickest
That's a
way.
small cost. That's a
Yeah,
small cost compared to a divorce. Very
Yeah,
small cost.
yeah, and choosing the right partner, finding the right partner to connect with, like choosing the wrong partner is the quickest way of becoming from a billionaire to a millionaire, right?
That's what I'm
Ask,
talking about. Yes.
ask Rupert Murdoch, ask whoever. uh, but the point is that this is the main storytelling is how much do you value yourself.
Hmm.
It's not
Yeah.
value others. How much do you value yourself that you can invest in yourself? So you would, there's a trade-off. Like you go to Stanford, you're willing to pay the 100 grand per year to
Hmm.
get the education or the certificate, which you
Right.
can get in YouTube too. But in other things you don't, right? So it's in this in your personal of life, it's more difficult to get, right?
And one last question on this topic is dating or getting married, is it different for male and female? How is it different for each?
So the women now are much more successful. They don't need your wallet, so it becomes like, take away your wallet and impress me, right? Because they are
Hmm.
equally successful, come from wealthy
Yep.
family, widely travel. For men, it is generally that I need someone who will be a fit at my stage for the next 20 years. And our typical client profile are really successful industrial families or investment bankers or whatever it is. And so it is all the finer things in life, like, that they do. And the other differentiation is that they are looking for self starter wealth, rather than inherited wealth, kind of a thing.
Hmm.
So it's a very much, who are you, what have you achieved, right?
Interesting.
Rather than this thing. So it's a very very unique perspective, and it exposes the human psychology because it's a very personal story.
Yeah, and I think that you're bringing light to how important of a decision this really is. Make spending money on a college degree or advancing your education, I would argue this not choosing the right partner would undo a lot of the work you've done previously.
Correct.
That's the idea, right? And I think that you're bringing light to how important this decision making is. And I think that was a great perspective. One last question about you is, what is something about you or your life that you wish more people knew about?
So in my life, right, I've had a very lucky and fortunate career journey and life journey, but the point is that I came with two suitcases in every country and then had to rebuild from there, right? So you are the product, and the only asset that I have is my brains, or it's not my looks or anything like that, and it's how you adapt. And I think the ability to synthesize a situation and get out of your comfort zone where you have no connections and make it yourself is a very satisfying journey. And if anything that I would say is, when the doors are closing, just get on a plane and go to some other place and build, because that is the glass half full part of it, because the
Hmm.
glass seems very half empty where you are. So
Hmm.
that bounce back ability is what I would say is been the story of my life.
Love it. So what I'll do now is go ahead and share a quick perspective regarding fitness and health, and we'll go ahead and conclude subsequently with Anand's plans for this year, whether that's going to be professionally or that's personally. The perspective I really want to share is really about challenging the requirements of making a physical transformation. Now, a lot of what you would be led to believe now is, in order to make a physical transformation, you have to go to the gym 4 or 5 times a week, and that includes commuting to the gym, commuting back, includes taking a shower, and all this. The issue with this perspective is that not all individuals, and many of which probably watch my podcast, entrepreneurs and executives, have that time capacity. So this can lead to a lot of individuals not even starting their health journey, or potentially going on it and eventually not going to continue due to the time commitment. So really, what is required here? It's really challenging what is required for you to make this physical transformation. If we look at the basic requirements of losing weight or losing fat, according to PubMed, it's basically adhering to a negative energy balance. And all that means, in simple terms, is you get the right amount of movement and you have the right calorie intake. But out of these two, what takes our time is the movement. So how can you do the movement in the most time efficient way? You have to do it in a way that's location independent as opposed to location dependent. And what I mean by that is something you can do anytime, anywhere, as opposed to one fixed location. So something I'd recommend specifically is leveraging like something like step count, because step count is something you can do while you're listening to this podcast, while you're traveling, while you're potentially on a business call, etc. The idea is, can you create a process that adapts to your schedule as opposed to you making time for it? That's the whole idea behind this. Because once you do that, the capacity and the accessibility to make a transformation is a lot higher. And step counts actually would I even leverage myself to lose over 70 pounds and actually keep it off. So hopefully that gives a different perspective to how you can achieve a physical transformation, but in a way that actually adheres to your schedule. So what I'll do now is go ahead and move this conversation to Anand's plans for this year, whether that's going to be professionally or personally.
Yeah, sure. As said, that it's question of investing. So every year I have a personal goal and a professional goal. I only have one each, right? So it's either change your job or change the company, whatever it is, right? Buy a house, whatever it is, right? That's those kind of things. So in this year, the personal goal is to change your diet.
Okay.
Okay, and I'm going to Austria to a medical clinic that specializes in this. Is called Life, that does specialize in gut health, and as a result, it's and again, I don't do anything cheap. So this, when you put the money, then to really get yourself diagnosed, then it'll lead to a lot of lifestyle changes and diet changes. But I think the food habits are a huge contributor. And then once you work that hard towards that goal, you will do the movement anywhere and you'll make time for the movement. So, I play
Excellent.
soccer and those kind of things with my kids. So that keeps me moving. But, gym is, so, I try to incorporate things that are realistic for me.
Absolutely.
And the biggest thing that I can turn out is stop eating junk. So that's
Yeah.
what.
And that's exercising caloric control. But the idea is, if you can identify what's required to make a transformation, there are definitely ways where you can come up with unique pathways to attend to those requirements and work for you. So those are absolutely great goals. Now, where can people learn more about you, Anand? Is LinkedIn the best place? Is there a website specifically?
I'm a fairly private person, so my public persona is more in the I said LinkedIn is a cover charge, but yeah, it's I don't publish. I'm not very active on social media. I
Okay.
don't post that kind of thing. I try to keep as low key as possible. Ultimately, I'm a
Let's just see. I got very lucky talking to
yeah,
you.
I'm an accountant, so I'm a bit understated and a bit reserved in that regard. But that's how I am.
Well, all the value provided to this podcast was really interesting. I'm sure we would not have gotten that opportunity unless I kind of invited you on the podcast. So I'm very pleased I got the opportunity, and it was a pleasure to have you on. This
Thank
was
you.
Ari and